Welcome once again. This is Searing Yin, and today's title is Where to Buy Your Midterm Rental Property. Welcome once again. This is a very exciting event. There's so much for me to present. If you want to learn more about this asset class, please, at the end of this video, smash the like button and subscribe to my YouTube channel for more information. And also, better yet, subscribe to my email list on my website link below so you will be part of our real estate investing community membership free. All right. So without further ado, let's proceed. Mid-term rentals, the emerging asset class, exploding emergency asset class, and where you could skyrocket and your rental income 10x or more. So mid-term rental is more than 30 days and less than 365 days long. And the vast potential rental pool, or they are not all inclusive. They are beyond what I'm about to say, but they are. It'd be nice if you could rent to traveling nurses, contract workers, retirees, digital nomads, people who's doing remote work throughout the country and throughout the world. They have those flexibilities. Possibilities are endless for you as a mid-term rental property owner. Again, they are not this type of property methodology is not short-term rental, which is 30 days or less, is not long-term rental, which is 1 year lease, annual renewable lease most of the time. So the beauty of owning a midterm portfolio is that you have the flexibility of transitioning from your existing short-term rental portfolio, or you could migrate and from your long-term rental real estate portfolio as well into the MTR, I call it, which is midterm rental. Furthermore, you could do it remotely and passively, regardless of where you live in the US. You could be 100 miles away. You could be 10,000 miles away. You could live in other part of the world, in Mongolia somewhere, or in Sri Lanka. You can do it remotely. You can do it passively. You can buy. I'm not, no, over time, this is not a get rich quick scheme. Over time, one of my ideal proposals for you is for next few years, you build up a 10 property portfolio, 10 or more ideally. Do it consistently, buy as much as you can based on your financial resources and your goals and your objectives. Of course, out of the 10 property portfolio, you could buy several shuttle rentals, one or two or more. You can buy 3 or 4 or 5 mid-term rental type of properties, and the rest you can buy long-term rental, 1 year annual lease rental type properties. So give you a sense of diversification or asset allocation. Finally, once you put together all the system, process, and procedures in place, all you need is around 1 hour per week doing this real estate business. You can exponentially grow your real estate business 10x or more, and the midterm rental is just the tip of the iceberg. I kid you not. I'm not going to go over all the specific details of writing the lease contract or marketing or this or that. That comes later. That's easy, to be honest. The hard part is where to buy and how to buy and what are the price point. The numbers still has to make sense. What I mean by the numbers, you still have to cash flow the price of the property and have to make sense, and all the debt service and related expenses are associated by a rental property, and regardless whether rental or not, it still has to make sense. Therefore, by the way, myself and my investors are slowly migrating into the midterm portfolio, meaning that we are diversifying into midterm portfolio methodology, which is in its infancy. Midterm rental is in its infancy. If you look at the nine-inning baseball game, that is, if you use that analogy, I would say midterm rental is barely at the first inning. And I can even say midterm rental is the batter's box. The game has not even begun yet. It just goes to show you the potential benefit and the value and the all great potential in terms of creating generational wealth for you and your family. If you do it right, if you find yourself the right team, all those kind of things, right? You have to find the right teams, a trusted team of financial professionals who understand your goals and objectives, and who can put the resources together for you on the ground wherever each particular market you will buy a medium-term rental. Does that make sense? My organization, we've been helping people, investors, to buy long-term rentals for years, more than 20 years. Those same markets we can easily convert into mid-term rental portfolio. This new asset class and midterm rental has fell into my lap. Our transition for me, even though I'm not a midterm rental expert by any means, most of my personal portfolio and our hundreds and hundreds of risk investors that I've consulted over many years to buy in many markets are long-term buy and hold, 1 year annual lease, and we have done very well. This is our methodology. This is our business model. I'm just sharing with you that we have pivot from our core business model into midterm rental property ownership. It's not the only thing. It's a additional real estate asset class we are adding into our investors' portfolio. This is extremely exciting. Needless to say, more information will follow beyond this video. So all you gotta do is subscribe to my channel and subscribe to my email database, and you will get updated about this type of investment opportunities, which in my opinion is mind-boggling. This is not even mainstream scenario, this type of investing, but I can assure you it's going to accelerate. People can hear about it very soon. But since you are entering into this space early, the early birds catch the worms. Anyway, jumping back, where to buy? Well, all the great sub-markets, suburban, not urban, not remote, is suburban, outside of a major metro. That's the key driver here. And preferably in the Sunbelt areas. And the price point is relatively affordable. And I will define what does that mean momentarily. Let's focus on some of the top tier markets that we have teams in place and turnkey providers in place and property managers in place, what have you, in these following markets, because we've been selling, like I said, long-term rental investments homes for our database of network investors for many years. And this is an easy transition to us to incorporate our business model into midterm rentals. And here are Florida submarkets, which is Southwest Florida and Central Florida, where it's a vast market, extremely profitable market for over the years, and will continue to do so. And we transition into midterm rentals. Same thing, that we have relationship in our team, realtor networks on the ground as well in Texas sub-markets, suburban markets. I call it the big four, which is Austin, but Metro Austin, not inside Austin. It just want to make that clarification. San Antonio, Dallas, and Houston, the suburbs. And of course, North Carolina, Raleigh, Durham, Charlotte. This is just 3 of the vast metro submarkets. I just want to highlight for this particular video. There are more relationships that we have in other part of the countries, but this would be what you've just seen has to be best markets to venture into midterm rental ownership. Does that make sense? Turnkey provider, new construction, property management, or self-managed. That's part of the whole system that you will be using. Let's proceed. Now, here's a deep dive. I'm not going to go over the numbers, okay? You can go over the numbers on your own while you watch this video. You can dive deep, look at the numbers. The benchmark is you buy whatever the purchase price is, in this case, single family home in Florida, typical 3-bedroom, 2-bath, 15 to 1800 square foot, 25% down. Doesn't matter about the mortgage rate, interest rate. This could be 6%, could be 7%, could be 7.5%. You can still cash flow, right? And you can still cash flow at 25% down payment. And at the end of the day, on a long-term 1-year annual lease, which is in this case, $2,300, is only a couple $100, which is fine. It's still positive cash flow. By the way, this is an indication. This type of benchmark, a single family home, applied to all the market, which I discussed about North Carolina, Texas, and Florida. This is the cookie cutter type of homes, new construction, single family homes, and typical price around the low to mid 300, the rent around 2,300. you minus all the debt service, monthly expenses. At the end of the day, it's all about positive cash flow. Be it this is a long-term lease. Now, if you convert this into a midterm rental, potentially you can rent to a midterm rental client 3 to 6 months at a time, whatever, at the and higher rent. Before it was 2,300. Now it's $3,000. This is just an average. Could be more, could be less, depending on the neighborhood, on the market, on a lot of scenarios. So if you can rent it for $3,000, sure, on a midterm rental situation, minus a 10% vacancy between tenants and maintenance fee or whatever is 7%. At the end of the day, your monthly net cash flow is around $500. So you can see the huge bump in positive cash flow associated with midterm rentals. The other type of property that we highly recommend to do midterm rentals are duplex. I wouldn't go beyond duplex because if you do a triplex or fourplex or more, you're venturing into the lower type of neighborhood, C-class neighborhood. No, I only want midterm rentals to be in location that are A to B plus class neighborhood to get the quality tenants, what have you, in good neighborhood on the tenants, on those midterm tenants that can afford to pay you higher monthly rent. So with that in mind, now on the regular long-term rental, which traditional long-term investment rental on a duplex is around 4,200 on both sides, both unit, which is around $2,100 per side, total of $4,200 monthly rent on a 1-year lease, annual renewable lease. And again, 25% down, 6 to 7.5% mortgage rate. At the end of the day, you still can achieve a little bit of monthly positive cash flow, which is these day and age, that's what you can expect, right? And nothing wrong with this based on this high interest rate environment. So this is a good starting point. Okay. So if any of you have any higher expectation about the cash flow, please let me know. I will need to educate you more about the reality of today's investing housing market environment. Now I just gone through before and after. Now this is before, which is an annual rental based on the rent as I just discussed. Now I'm going to transition to the same property, the same duplex, and this time each side is rented for $3,000. So $3,000 per side multiplied by two sides. So your total gross monthly rent is a whopping $6,000, give or take. At the end of the day, when you add up, if you minus all the monthly debt service and expenses as indicated on this sheet, otherwise known as pro forma, at the end of the day, you have a monthly net cash flow of a little bit more than $1,000 per month. How's that? How about them apples, as they say? Now, I will quickly go over the remaining slideshow. When you buy rental property, whether short-term rental, mid-term rental, or long-term rental, you are essentially buying an income property that is history's most powerful and proven multi-dimensional real estate asset class because you're getting four benefits: cash flow, passive income, tax benefit, appreciation growth, and using the power of 30-year fixed rate mortgage by leveraging your assets. And I'm not going to go over details about other benefits of other multiple revenue streams is above and beyond the rental income. Okay. You can read it on your own. You can do a lot of negotiation, a lot of flexibility over time, as you can see, right? There's more. And wait, there's more. See that? See all the different ways you could characterize your income property over time. This is totally mind boggling. My final point of view is the great legendary investor, Mr. Warren Buffett. He said, be fearful when others are greedy and be greedy when others are fearful. In this current US economic environment, there's a lot of fearful people out there. So you just be greedy in a good way and pull the trigger while everybody is paralyzed with the fear, with the doom and gloom. You will create a recession-proof, inflation-proof, real estate market crash-proof real estate portfolio by adding midterm rental into your long-term real estate portfolio. All right. So I know this is just a tip of the iceberg. This is a high level. I get it. A lot of you want more information. You will get it, right? You will get it. So, and I know you asking about leasing contracts, how to market your rent, what website to use, how you can self-manage. You can do remotely, passively, only a few hours per week, regardless of how many properties you have. Yes, but you have to do the work. Obviously, you have to put in the effort. More to come. If you see a lot of value from this video, please smash the like button and subscribe to my YouTube channel and subscribe to my weekly email newsletters by click on the link below. You'll become a free real estate investing member of our network, the Yi Real Estate Network. Thank you so much. This is Siwen Yi, and I will see you on the next video shortly. Have a nice day. Bye bye.